Let's look at the sell-off that's happening on global stock markets as we speak. Joined in the studio now by the Chief Market Analyst at Century Financial, Vijay Valecha. Vijay, good morning. Thanks very much indeed for being with us.
Good morning. Thank you for having me.
Well, let's start first of all with live trading this morning. The biggie is the oil price, down 30%. Biggest drop since the Gulf War back in 1991, second biggest on record. Did you see this coming, Vijay?
I don't think anyone saw it coming. I thought we went into the weekend with the OPEC meeting in Vienna, and we actually expected a deal to come through with the actual oil reduction, but it didn't come through, and that's really a bad news.
So, oil is $35 a barrel at the moment. Earlier on this year, it was $71 a barrel, so it's literally lost more than half its value within 2020. What are people on your platform doing? What are your clients doing? I know it's very early. It's only, 7:05 in the morning, so people are waking up. But what kind of interaction are you having with clients?
So, of course, there's a lot of panic because we've not seen such a fall since the last 3 decades, like you spoke. We have a lot of panic. And the most important thing is the pricing. Right now, $34 a barrel is actually the price we had seen in 2016. This was the low price that we were running in 2016. So people see the support, but given the oil price war going on in the markets, people are panicked.
So just remind us why the oil price has fallen so sharply. When Brandy and I were doing the show last Thursday, oil was what? $53-ish a barrel for Brent crude and everything. Well, not great, but it seemed fine. In very simple terms, what has changed since then to take us from 55-ish to 35-ish?
So what we have seen is we actually had the OPEC Plus meeting in Vienna on Thursday and Friday, and we actually expected that there will be an oil reduction in output of 1 million barrels, but we actually did not see that. And the bigger thing is that actually Saudi actually also came up with the OSP. The OSP is their official selling price, and they have actually reduced the official selling price in April. That has been the major panicked reason.
Okay, fine. So this is a price war. The headlines about a price war are doing the rounds at the moment. Is it really happening, a price war among oil producers?
Absolutely. And we've been seeing wars happening everywhere. First we had the currency wars, then we had the trade wars, and now probably it's time for oil wars.
Okay, fine. Well, one market that's benefiting from all this, it often does, is the gold price. Literally within the past hour and a half or so, it's crossed $1,700 for the first time in 7 years. Same question, did you see this coming, Vijay?
So oil, we were actually very bullish from the start of last year, and we have continued to be bullish. We, in fact, even right now think that even this is a low price. Something for...
So you mentioned oil, but you mean gold?
Sorry, for the gold, yeah.
Gold, okay.
For gold, we're actually still bullish. We think that we should be seeing $2,000 an ounce as well.
Now, you're not the first person to sit in that chair and say $2,000 an ounce. Jeff Rhodes, our regular gold correspondent, called gold at $2,000 last week when it was down at $1,500. Citigroup as well, one of the world's biggest banks, again a week ago, called gold at $2,000. Why?
Well, majorly the risk appetite in the world has to reduce. We have seen this bull market has lasting for more than 12 years. We have seen volatility come up. We have seen the yen move up. So gold is a natural safe haven to be getting into right now.
And well, let's talk about currencies. I mean, this morning the Japanese yen is doing really, really well. The euro is doing really, really well. What's the headline that I read? Investors are stampeding to safety of the yen and the euro at the moment. Tell us about this stampede to safety in the foreign exchange market.
Absolutely. We had the worst weekend on the coronavirus update. We had the worst weekend all over Europe and all over Asia as well. So China is stabilizing, but besides China, the rest of the world is being impacted really badly. The world doesn't know what to do. The vaccine is not out yet. People are really running towards safety right now.
What does this mean for the Indian rupee? We know one of the biggest trades in Dubai is dirham rupee or dollar rupee. It's the most active contract on the DGCX exchange here, but just in terms of everyday life, Indian expatriate community here. Currently, 1 dirham is getting just above 20 rupees. What are the dynamics with the Indian rupee in particular?
The dynamics are very similar to the dollar, so we can actually expect the Indian rupee to be continuously weakening from here till actually the market stabilize.
And what about the Pakistani rupee? I'm looking at the moment, if you're heading off to Karachi or Lahore later on today, you're going to get 41.5-ish Pakistani rupees. If you look at this time last year, you were getting 38 Pakistani rupees. So it's stronger, but not dramatically so over the past year or so. What are the dynamics with the Pakistani rupee?
It's exactly the same. We should be seeing a flight towards safety, and a flight towards safety for any emerging markets would definitely be moving towards the dollar or to be moving towards the Swiss franc or the yen.
Okay, so yen, Swiss franc, those are the safe haven currencies that people are going to be flooding towards.
Correct, absolutely.
Final word on local markets yesterday. More than $200 billion wiped off the value of Gulf stock markets yesterday. Most of it was in Saudi Arabia. Most of that was Saudi Aramco, the big oil company, understandably with the oil price falling. But what are the dynamics in Gulf stock markets? Dubai was down 8% yesterday.
So we have seen a big sell-off. In fact, the DFM sell-off has come more than what we have seen in the last 10 years. The bigger sell-off was seen only in 2008. But what we can expect further, especially after looking at how the markets have opened today, we should be seeing the continuation of the sell-off.
Right. So Brandy mentioned, 2 words this morning when we started the show, in trying to be optimistic about this. One of them was opportunity, and the second one was buying. Whether it's real estate, Brandy, are you on Property Finder at the moment looking for an apartment in the Greens?
Both Property Finder and Debizzle.
Oh, very good. Yeah, other listings platforms are available. But where are the buying opportunities, Vijay, at the moment? Pick an asset class. The floor's yours.
But definitely would say that equities is still the asset class to get into.
Get into?
Yes, absolutely. Okay. So the idea is we are seeing a lot of discount. We have seen the DFM fall 20% just in this year. It's year to date down by 20%. We have seen good companies come down quite a lot. These are probably discount shopping opportunities. We have seen even the SPX down by 17% for the year. So there's a lot of good stocks.
S&P's down 17 for the year.
Absolutely.
So and it's going to fall further today, isn't it? Dow futures are down 1,000 points.
Yes, absolutely. So that's what we're going to see today evening as well. So the idea
So what about kind of 2:30 on Monday afternoon, the 9th of March, is the buying opportunity in this downturn, you think, maybe?
The idea always
Those are my words, not yours. I'm aware that I'm putting them into your mouth.
Yeah. The idea is, as an investor, you should never be looking at one day or one price to be buying at. But definitely all dips are good buying opportunities.
So equity is a good buying opportunity. Gold, you think, have we missed the rally in gold, or is it still worth having a punt on gold?
I think the rally has just started. I think we should be seeing it go up by around 20-25% for the year, even further from now.
Oh, Jeff Rhodes has put it at 2,000 by June. Where do you want to come in on that?
I also think that we should be seeing 2,000 probably by the end of the year, not by June, but yes.
Vijay, great talking to you. Appreciate your time this morning. Busy day for you. I'll let you get back to the office. Vijay Valecha, Chief Market Analyst at Century Financial. Thanks for your time this morning.
Thanks a lot.